Hey, welcome back everyone to the Black Brain Trust. This is episode 175. I'm here with my co-facilitator, Lionel.
Hello, everyone. How you all doing today? How you doing today, Mike?
I'm good, brother. Yourself?
I am well.
All right. Please hit the like button as you come in. Share the video if possible. Also hit that notification bell so that you get the alert that we do go live. There's a docket in the description beneath the video. You can use that to follow along. And just as an FYI, we are not certified financial planners. If you want a certified financial planner, please go to cfp.net. We do not give out financial advice here. We're going to get started with the first item on the docket. All right, so first item on the docket is from fastcompany.com. This free software automates bankruptcy to help people clear their debts. When she was laid off from a job in the Bay Area and had to move out of state to care for a sick relative, a woman named Shira struggled financially. She found a new job, but it only paid $8 an hour, and after some unexpected expenses, she was soon deep in debt. She eventually moved back to California and found a better job, but learned that her wages would be garnished to begin paying off her debt after excessive interest rates, a staggering $50,000. Shira, who asked to withhold her last name, later met with a lawyer to talk about declaring bankruptcy, which she which could cancel her debts, but learned about the paradox of the system. The process is so expensive that the people who need it most can't afford the legal fees to file the necessary paperwork. It didn't make sense that the lawyer would charge me $4,000 when I'm struggling to even pay my bills, she said. She thought that bankruptcy wouldn't be an option, but she then learned about a new, quickly growing nonprofit that uses software to fill out and file the paperwork at no cost for low-income clients. She used the technology, and her family got a new start. The ability to file for bankruptcy and recognize your debts is an incredibly powerful tool to help struggling low-income people overcome financial hardship. But the complexity of the process shuts many people out. It requires 23 jargon-heavy forms, and it's not something that someone can easily accomplish on their own. But people who need it can't often afford lawyers to help them. We exist so that we can help people maintain a decent livelihood where they don't starve and they don't end up on the streets, says Rohan Pavaleri, CEO and co-founder of Upsolve, a nonprofit that makes a TurboTax-like web app of the same name. They don't have any money to afford a lawyer. In total, he says, roughly 20 million low-income Americans could potentially benefit from bankruptcy, whether they've landed in debt from medical expenses, the loss of a job, or predatory loans. Since it was launched in 2008, Upsolve, a winner of Fast Company's 2019 World Changing Ideas Awards in the social justice category, has helped more than 500 people erase their debts, more than any other nonprofit. Other nonprofits have a slower process where caseworkers can only help one person at a time. By using software that automatically fills in forms, a process that would normally take an attorney hours shrinks to 5 minutes of review. Eventually, using machine learning, the entire process could be automated. That makes it possible, Popularity says, to begin scale up to reach the millions of Americans who could benefit from bankruptcy but don't see a viable option. Lionel, what do you think about this?
This is my first time hearing about something like this. Article said that it's been in existence since 2008. Um, there are a multitude of ways people get into debt, not just under their own validity. it can help. Filing for bankruptcy is expensive because of the lawyer fees, like the article said, and it does kind of negate the purpose of filing for bankruptcy if you got to pay for it. Sometimes that could be done out of design. It's helpful. It's a helpful tool, undoubtedly, and really this goes in a step of the direction of artificial intelligence. It spoke about the AI and helping those that need to file for bankruptcy, not having to pay the
Mhm.
absorbent costs to file for bankruptcy. Those who actually need it. Of course, it's not going to limit to those who actually need it, but um,
Mhm.
for the sake of this conversation, for those who actually need it, it can reduce the price and the cost to file for bankruptcy.
Mhm. Yeah, it's interesting that it's this is kind of putting the it's kind of putting lawyers out of out of a job. That artificial intelligence, machine learning, deep learning, um, is actually being leveraged in a way that actually benefits people. So this is a very social justice um, sort of. This is a way that artificial intelligence can be used to leverage social justice. That most people were saying, well, automation, artificial intelligence is going to take your job. Well, it might have took that guy's job with the PhD, but not your job. You know what I'm saying? Like the hospitality area where this person was working, um, although it wasn't paying enough, it actually gave them some form of opportunity to look into a better lifestyle. So we had the discussion last night that the fourth industrial revolution um, would need people to be on board. Well, I think you have people on board now.
Right, and that's a good, interesting point. It now is taking money off the table from lawyers who, through the past years, especially prior years to this software being prevalent, has gotten a
Hmm.
lot of money from bankruptcies. That's been the bread and butter, especially since you have a lot of debt coming. Um, you have this.
You might be breaking up a lot, Lino.
Okay. Um, I'm gonna pass it off. Hey, how you doing, Dollar Will?
Dollar, what's going on, brother? I think Dollar was getting his mic together. So let me yeah, Dollar dropped off. So let me get to this next article on the docket. All right, this one is from entrepreneur.com. Black female founders face constant rejection. They are thriving anyway.
Hello, can you hear me?
We can hear you, Dollar. We can hear you.
Okay. I'm sorry. I didn't before it didn't it wasn't working like you said. Yeah. I don't just on that if I as much as I caught on that last story, I just my comment is real short. I don't It's gonna be interesting to see how what impact that has. But there's a artistic aspect to law. It still takes some there's a political aspect to it that I think it still needs a person, um, maybe sometimes a connected person. It's not. I don't think it's just about the letter of the law, But I do think, software and things like that can help the layperson be a little more informed. But will it replace lawyers? I have to check that article out a little deeper. But I can't see the human part of law being minimized because of software.
Well, let's look at it from a different perspective. If you take all of the laws that's on the books and you put them into a data set, and you feed it to something like artificial intelligence or even machine learning, um, what's going to happen is all the data that has just been fed to it, the lawyer that typically regurgitates the law um, without his own personality, the artificial intelligence is actually going to step in that area. Now, when I say the personality of that lawyer can actually finagle certain things because he's thinking. But when you feed that artificial intelligence enough historic information of how a case was won, how a case was litigated, and things of that nature, that artificial intelligence is going to give you that same exact response. You think about when you go to Amazon or you go to any of these retailers, their websites, the e-commerce platforms, and you type in something and it automatically tries to fill it for you, is because that historical data and heuristics is pointing you in that direction that you were looking for anyways. So if you take into consideration what artificial intelligence can do from a legal standpoint, or from a lawyer standpoint, at least in this regards, it's going to get you the same results that a lawyer would have typically gotten you.
I disagree. I think that artificial intelligence, in the way you described it, it would be an excellent tool for a lawyer. The reason why I absolutely disagree that it will get the same result as a lawyer, because cases are decided by juries and judges, and these are humans, and human beings are not only or not always rational beings. And sometimes many times the argument is secondary to who's making the argument. Sometimes it matters. Sometimes who the victim is more important than the legal statute being argued. You know, we are discriminating beings. You know, some people make more sympathetic victims than others. Some arguments are readily accepted from some people than others. I mean, it matters whether the lawyer is black or white, or whether the victim's black or white, male or woman, young or old, skinny or fat, rich or poor. All of these things are part of what humans use to make decisions. It's messed up, but we're flawed in that way, and that those flaws are part of the process. And as long as humans sit in judgment, that artificial intelligence can make lawyers better, or at least an average lawyer can become maybe a better lawyer by using the outcome of artificial intelligence. But the human aspect of connecting with jurors on a human level, and presenting your victim, or making the jury or judge identify with the person you're representing as a victim, having them internalize them as a victim and connect with them, and empathize with them. That's the art, man, and that's humans. And I don't see artificial intelligence, you know, eliminating that aspect of it. But that's all.
All
But
right.
I definitely see it helping the industry in a huge way, and on both sides, the lawyers and say me and you. We can see the strength of our case. Maybe get some artificial intelligence to tell us if we really have a case before we spend all that money. Maybe we won't pay the lawyer because the AI will tell us, "Look, you don't really have a case."
All right. All right, this next one is from entrepreneur.com. Black female founders face constant rejection. They are thriving anyways. Most women under the age of, say, 45 dread a particular time of the month. Fellas, stay with me. So, Ariane Long, an African American millennial out of Washington, D.C. area, came up with the Family Box, a way to make monthly menstrual routine less burdensome and more like a gift. Her ultimate PMS kit includes a supply of organic, all cotton feminine products, along with wholesome wellness treats like shea butter, herbal tea, and organic chocolates for about $30 a month. It comes in a pretty package that gets delivered right to a woman's door just in time for her cycle. When Long, a former health plan communication specialist, launched her business in 2015, she had only one problem: getting funding from investors. Let's face it, she says, I was talking to middle-aged white men. They didn't know the product or use they didn't know the product or use the product, and they didn't care. I'm a brown-faced, 5 foot one inch young woman who wasn't taken seriously. I had done my research and was ready, but young white men, some of whom had simply jotted down an idea on a beverage napkin, got the nod. Long was hoping to snag a modest $10,000 to $75,000 investment. Everyone she talked to said no. The numbers bear out her plight. Since 2009, out of out of the $424.7 billion in total tech venture capital funding, the, the portion given to black female founders, a minuscule 0.006%. According to the Project Diane 2018, a report by Digital Undivided and Entrepreneur Pipeline for Women of Color. Further, the average investment is only $42,000 compared with overall average of $1.3 million. The picture is not much better for traditional bank credit. A recent report from the Federal Reserve Bank of Kansas reveals that 40% of black women who request financing don't receive a single penny, nearly twice as many as non-minority women who are turned down. Natalie Cofield, founder of Walker's Legacy, a national network for women of color in business, chalks it up to relatability. People invest in people they feel connected to, and the majority of those empowered don't necessarily get a black woman. She explains. Another way to put that is selection bias, which researchers from the nonprofit Diversity Venture Capitalist Fund, a staggering amount of, after analyzing 5 years of deals made by 135 firms. The investors were largely from the same gender, educational, ethnic, and location background as the founders they choose to invest in. They write. Cofield goes on to add that turning to family members isn't generally an option for a black woman. Even if they are middle class or upper middle class, they are often providing some kind of financial support to a brother, cousin, parent, or auntie in crisis, or a community group they support, and they don't have the disposable income to invest in your business dream, nor nor can they quit their jobs to do it. But I don't need statistics to know this is true. I've seen it personally. Back in the mid '90s, when I started my company, I spent many sleepless nights watching those far-fetched infomercials on how to buy a house with no money down. With eyes wide open, I dreamt of purchasing a dilapidated mansion in my Brooklyn neighborhood and converting it to a luxury bed and breakfast, would where I would have the time of my life, decorating the inn and meeting the world as guests at my breakfast table. In fact, I envision owning 4 B&Bs, one in a different city I love for each season of the year. I don't want to read this whole thing because I think that kind of get the point. It's really long. But I will say this, for black women who seem to have this problem finding funding and things of that nature, black men go through the same thing. In fact, black men go through it twice as much. So while I understand it's hard to find investors as a black woman. You know, black men don't even get the type of support for an idea, for a campaign to get off of the ground, in terms of the tech world, or even just in the startup space. You know, black men don't get that sort of support either. So besides funding, you know, just the moral support is not even there. So we have a big problem with how we go out crowdfunding our operations, or our startups, I should say. We need our own banking system. That's really the biggest problem. There's probably about 5 or 6 black banks. I'm a part of one. One United, I think that's probably the biggest bank, biggest black bank. Even they have a problem funding some startups, from my understanding. So the problem here is, instead of people putting money into super chats, we need to actually put that money into a venture capitalist fund and actually start funding our own startups. Dollar, what's your take on this? Being that this woman was from DC.
You're right, but you know, more also we it goes back to culture. We have to become the venture capitalists. We can't become the venture capitalists if we don't continue to produce this professional class that black men and black women largely don't respect. So we can't become what we need to become to really be an alpha race, because we have a fucked up definition of what alpha and masculine really is.
Mm.
So if we don't make intelligence the primary definer of masculine, as that sphinx shows the man head on the body of a beast, meaning that the head, the mind, is supposed to rule the body. And if we don't take that monument that our ancestors put there for us and internalize it and learn to revere intelligence over the body, because the body gets old and weak over time, but the mind not so much, not as fast. We get wiser as we get weaker, but we have to learn greater appreciation and respect for our elders and intelligence. So until we get that right, we're always going to be beggars to other people, you know, wondering why they don't treat us equally. You'll never be equal in anyone else's house. Hotep.
You know. Go ahead, Dino.
I have to agree with everything you all said. There's nothing more I can put to this other than what you all said. I'm glad that you took the span that you did from this article, Mike, saying that black women are not just the only ones, as if they're the only people in the world of people, different people that face this experience. And so I'm glad you took that spin, and I do agree with Dr. Will said.
You know, not that I pocket watch, but I see certain people creating documentaries and they getting, you know, $100,000, $200,000 for a documentary. But you know, a woman like this can't even get, you know, 50 grand, you know, for her startup. You know, I think there's a bit of a problem in how we assess what's a priority in terms of being progressive, being pro-black, and being that you know, social justice advocates.
But how about this, Mike?
I'm not
How
pocket.
just
Go ahead, brother.
I'm sorry. Go ahead, man. I'm sorry. Go ahead.
No, go right ahead, brother.
You just hit me with an idea. I'm sorry for interrupting you, but go ahead. I'll wait.
Mm-hmm. No, I was just going to say that we have to, you know, reevaluate our positions as supposedly pro-black and being progressive and social justice advocates. That we put our money into these areas and that are really not a priority. You know, whether it's the black church or it's documentaries or it's the you know, building of a potential school. You know, $500,000 there, $250,000 there for something that hasn't even come to fruition. Meanwhile, there's women like this who actually need to get their campaigns off the ground and can't even get it from their own people, but have to go to some pale-faced person that has no interest in what they're talking about. So go ahead, Darwin.
Yeah, you hit me with. I was inspired by an idea. So I'm always solution oriented. So, and you hit me with one. You know, I've said other times. You know, my position is we have three relationships with capitalism. Okay, you're the laborer, meaning you get a job, or you can own a business, or you can be an investor, either venture capitalist or stock. So you're either a worker, a business owner, or an investor, and we got to be at least two of those three in our lifetime. That has to be the goal for everyone. Now, if we're going to make rap records and dunk basketballs and make documentaries on history, I'm big up in all of that. I support all of that. But we need to get that other investor class to show the people that are brilliant in our community that achieve wealth with sports, entertainment, documentaries, or whatever legal means they did to get it. I'm celebrating all of that. But we need that other class of people that says, hey, 50 cents, where was the black venture capitalist for 50 cents to talk to? Wow. I mean, I'm inspired by Warren Buffett too, but we got to produce our own that where the 50 cents respect that person and they go sit at that person's foot and say, this is what we do next. Why is everybody running the Warren Buffett? Where's our black version of that? So that's where I turn to. I'm not gonna use that educated lame crap. That's gonna send me off on a whole nother thing. I'm sick of that crap I've been hearing this week. I'm about to fucking lose it on this ignorance. I'm about to blow, okay? Because that's some crap that we didn't even make up. That was a Pookie deflection. Okay, we never called ourselves that. We gotta stop saying that. Okay, and the divide was never about who got an education. It was about who was positive and productive and constructive. And then so the deflection came back. Oh, you think you better because you got a college degree. That was never about that. We never drew no divide looking down on the bus driver, the mailman, the police officer, the fireman. It was never a divide between that guy and the college guy. Okay, so that's Pookie trying to freaking hide out amongst good black people. All right, now that's a whole nother thing. But the point. God, I forgot my point dealing with that Pookie stuff.
Write it down, write it down.
We got to create that class. Oh, the educated or the professional or a productive class, people with jobs, okay, and resources, whether that's just a home, whether you're just a mailman and you got a home or two, that we got to grow that class, and that class that gets those quote good government jobs. We got to say to them, great, you got that good job. It's great that you work for IBM or whatever, but the goal is not for you to stay there and get the watch. There's another plateau that the race needs you to go. You got to become that investor class. You got to take some chances, and you got to be the one to start those businesses. We got to stop looking to the least educated in terms of business experience, or least experience and most undercapitalized, meaning people with the least money. We look to the people with the least resources in our community and tell them to take the greatest chances, meaning they have to be the ones to go out there and start a business, and then it fails. But if we shift that and we say, no, you people with the experience of working for these major Fortune 500 companies that had the education and got some money, you have the powerful Rolodex, the people in down at City Hall. You people need to be the one to take those chances and start the business, and then that will create more opportunities for other people to go and get those good government jobs. But we got it flipped. We ask the people at the bottom to take all the chances. So that's my take on how we can change the complexion in the room when blacks show up asking for the venture capitalist funding. We have to create that class of people, with the money.
Absolutely. Yeah, absolutely. We got 21 people watching, 15 likes. Hit the like button, please, and hit the subscribe button.
So if you got $1 million documentary, if you got $1 million documentary to make that documentary, okay? You got $1 million, some music you want to do, make that music. We just and if you are your Harvard MBA, you need to hook up with black folks who got money doing things in other businesses. Bring that knowledge together and let's go to the next level.
I also think that this is an opportunity for people to really get in and sit down and really analyze the crypto market, because of how much money is moving around in that market, and tie it and try to tie your startup in with crowdfunding from cryptos. It wouldn't be uncommon to say, if you can supply at least 1 Bitcoin to my startup, I could actually appreciate that. That can actually go very far. you never know who's gonna come through and actually drop a and drop a crypto into their into that wallet, that digital wallet. So there's a lot of ways we can go about leveraging this emerging tech, such as blockchain and Bitcoin for crowdfunding our stuff. You know, I think black churches collect millions of dollars every Sunday across the country, and yet that money is not pumped back into areas of need, such as the startup sectors. It's just interesting that this woman, they decided to write this article as if black men don't exist. Black men actually go through the same exact thing, even worse, because black men don't get the moral support for their startups, you know,
Can you
or some of their
imagine if
ideas.
we?
Yeah,
Can you imagine back to
go
your
ahead.
black church thing? Can you imagine if we had everybody wants to buy a home or whatever? Can you imagine if every church said, "Okay, we're gonna create black contractors, home contractors and home builders, meaning we can build a home up from the foundation, or we can renovate your current home." And so the all that money that's in the church, those people are encouraged to use these black contractors and home builders. That would begin to, there's so many jobs associated with those construction trades. And we have a lot of men that's able to do that work, but we're not getting hired because we keep asking other people. And everybody in the
We need a black.
congregation buying a house anyway.
Mhm. Yeah, we need a black Angie's list. You know,
Yes,
that sort of
yes,
deal. We need
yes.
a black Angie's list that actually narrows the person down by their geolocation, and actually allows you to pay them through the app and everything else. So somebody needs to create that. Hint, hint, line up.
Sounds like we just
Um,
invented a business. Did we just invent a business? A
that's what
black
we do over
Angie's
here,
list?
right?
Yeah, did we see?
Yeah, I hear.
It
I
wouldn't
hear.
be. Yeah, it wouldn't be Angie. It'd probably be more like Tamika or some shit like that.
Right, exactly. No,
Tamika's
and it
list.
should be, because when we see that name, we know that's our sister. It's got to be a name we recognize. That's branding, exactly.
Hmm.
No shame in our game. That's it.
All right. All right. Next one is from NPR.org. Government watchdog flips on dollar coin, not dollar bill. Who says a dollar doesn't go as far as it used to? When it comes to dollar bills, a new report from the federal government says they are lasting more than twice as long as they were at the beginning of the decade. And that's upending an old argument about replacing the dollar bill with a dollar coin. Analysts have long argued that the federal government could save money by making the switch, because even though coins cost more to mint, they last longer. They last much longer than paper money. In 2011, the Government Accountability Office estimated the savings at $5.5 billion over 30 years. A second look from the GAO flips flips that coin argument on its head. Analysts now say the government would lose between $611 million to $2.6 billion over 30 years by phasing out the dollar bill. The economics have shifted because the dollar bills are lasting longer. When we look, when we last look at this issue in 2011, the paper dollar was only lasting a little bit over 3 years, said John Schumann, an assistant director at the GAO. When we looked at this issue again last year or this year, we found that the paper dollar is now lasting almost 8 years long. Schumann said that that's partly because of changes in the way the Federal Reserve processes dollar bills, but it's also a sign that in an increasingly cashless world, paper dollars aren't getting around like they used to. They are often showing less signs of wear and tear. As part of its research, the GAO surveyed lots of industries that might have a stake in the paper version coin or the paper versus coin contest, and found that most are not eagerly embracing the switch to dollar coins. Even the Coin Laundry Association, you know, it's it's right in our name, said CEO Brian Wallace, whose group represents some 30,000 self-service laundries around the country. Despite the name, only a handful of those businesses currently accept dollar coins. Meanwhile, alternate payment options have proliferated. You could still pay with a quarter, Wallace said, but you could also pay with a credit card or add value to a card, or taking the Starbucks approach of just waving the phone at the washer and it starts. Other businesses long associated with the coins also moved on. Dollar Will, what's your take on this whole entire thing?
When I was reading it earlier, I was thinking about when they started. Let me see. Didn't they remember when they way back how the penny, they started making it out of metals that were not copper? I think the price of copper went up so high that like a penny was like worth more than a penny. You know, so you don't. That's the problem with using valuable metals in these coins, because it can be a problem either way. As the value of that metal goes up, then it can take more of that metal to make the coin than the denomination of the coin. And the reverse, when it drops down real low, I guess it would be helpful in the reverse. The actual value of the metal is so low, but it can increase in value when you make it into a coin. So it's I don't even, whatever it is, whether we have coins or whether we have paper, we just need to get a lot of it. Let's get money. That's the bottom line.
From the surface, it seems like the article is hitting on something. Yes, it does seem like metal currency stay in circulation a very long time compared to paper dollars. You got fools out here eating money. You have fools out here lighting they dollars or bills to light something else. So to have that, I forgot the term to use, that velocity of money in the money system, that paper money, it does seem like metal-based currency would be in circulation, would last more than paper-based currency, depending on the culture. But dollar bill does bring a good point, because whatever metal you're using, savvy, smart people will then say, well, if the government's going to use such and such metal, then I'm going to invest in that metal in order for the price to go up. And then I'm
Well,
laughing
check
because
this
he's
out. What
right.
if you melt down pennies? You figure out, well, damn, these pennies are worth more if I melt them down.
Right, because it on surface it does sound logical, but people will be people. They're going to invest in the metal that is going to be made, is going to be picked to make these coins, and they're going to say, well, I'm going to invest in that.
Well, there's probably it's probably the fault of the retailers for all these pennies. Like, why do you have to make it $19.99? Why don't you just make it $20? That way I could just bring 20 quarters or now 20 silver dollars and I'm good. Like, I don't need to carry around all these pennies. Like, who in the post office, in the administration of the post office, says, the price of a stamp should be 47 cents? Just make it 50 cents so goddamn ready.
Right.
Y'all hit that like
the
button,
store
please.
part, the store part, I think they actually did some deep research on why they do that on the nines and stuff, because we think it's less than $20. But yeah, a
until the
stamp.
taxes kick
I'm
in.
not gonna like not buy the stamp, right? Because oh shit, that
Mhm.
stamp is 50 cents. I would have bought it if they said 47. I mean, if you gotta have that stamp, you're gonna pay for it. You don't really have a choice. It's not like you have an alternate way to send snail mail. You have to pay
Mhm.
whatever that price is for that stamp.
Hey, anybody ever thought about when you have a coin in your pocket? Most of the time, well, me, when I have a coin, I go out and I buy something, and they give me coins. I come home, throw it in a bottle, and it stays in that bottle for a few years before I take it to the bank or wherever. A lot of people do that.
Can
So
I tell you something?
the dollar is going to end up in that same coin pile. The other thing is that they started making the dollar. They added more plastic to the dollar, taking out some of the cotton thread that they used to put in before.
Mhm.
DE, I saved. I don't like walking around with coins. I just don't. It just makes too much noise. I don't like it. For 25 years, I saved quarters, nickels, and dimes and pennies. I would put them in the little plastic bags you get from the grocery store. And anybody that's been to my house, they've known I would have them all on my dining room table. I have these bags of pennies, nickels, dimes, and quarters stored all over my house. You open up a closet, you see them on the floor. Well, I moved in 2014, sold my house. I went to several trips. No, actually, no, I think I did it in one trip. I got a shopping cart and I wheeled the shopping cart with the coins into a grocery store and I went to that daggone machine. I had no idea how much it was. That thing came up to something like $3,500.
Mhm.
See, you're one of the problems why the research got skewed.
You know, it's just amazing. It was like forced savings, and and I needed the money at that time. I really needed the money. I was like, whoa. So save your pennies, nickels, dimes, and quarters. Now,
Imagine if there was a machine
what
where
made me so mad, I had some old ones in there. I might have had some. I don't even want to think about it. I might have had some old coins that was like worth a whole lot of money, but I wasn't going
you.
through that volume to find it.
Mm. All right, let's get to the next one. This one is from NBCNews.com. Why much of the country is headed for $4 gas. I assume they mean $4 a gallon. A consortium of oil-producing countries has taken more than a million barrels a day off the market, and that's the least of the problems plaguing American gasoline prices. Across the U.S., excuse me, regular gas average 200. I mean, sorry, $2.77. Sorry, something just went in my eye. Anyways, across the U.S., regular gas averaged $2.77 a gallon, up 7 cents on the week and 29 cents on the month, according to Gas Buddy. Last year, gas prices topped topped out at $2.98 at the outset of Memorial Day weekend. Skyrocketing prices are particularly pronounced on the West Coast, according to Gas Buddy. California already has the highest gas prices in the country at an average of $3.77 per gallon for regular gas, an increase of 49 cents over last month's average. Gas Buddy head of petroleum analysis Patrick Dehan warned in a Sunday tweet that the prices weren't down or weren't done going up just yet, predicting that the average price in California will top $4 this week. There's nothing short of particular on the West Coast. A trifecta of issues is causing gas prices to surge, Dehan said. Oil prices are climbing, but that only accounts for about one quarter of the recently higher gas prices American drivers have been facing, he said. A bigger issue is that this is around the time of the year when Many oil refineries plan maintenance as they make their annual switch to summer blend fuels. This year, unexpected issues took a higher number of refineries offline, squeezing supplies. This laundry list of refinery issues, both planned and unplanned, is having a dramatic impact on prices, DeHaan said. It's almost inevitable every year that there will be a refinery issue. So I don't have a bar chart up in front of me or some form of chart, but I'd be interested in seeing what oil prices have done for this quarter.
Yeah, you want to look at it now or later?
Well, we'll look at it later, but it'll be interesting to see what it looks like because to justify $4 a gallon, that's gonna cause
Yeah,
some
I
serious
don't think
problems.
so.
You're gonna see a lot of people.
Yeah,
You're gonna see a lot of people jump out
yeah,
of their SUVs and jump into some form of Prius or something like that.
right. I don't think we're gonna see it. We'll see what those experts say. Yeah, I think the dollar is gonna spike, and it's gonna put an end to that. But we'll see. We should definitely know by what is it, Memorial Day? Yeah, we should definitely be interested. The way that things are timing out right now, it'd be interesting to see where we sit at that moment in time. But we have a glut of oil.
Hey, dollar, why do you think the dollar? Why do you think the U.S. currency is going to spike when everybody, not everybody, but people who normally do these trades, except for Saudis, people are moving away from the dollar in trades. They either doing direct currency or they doing like Ethereum, Bitcoin, and so forth.
My short answer is take names of who's saying what. You have to challenge yourself to see if they're right over time. What you're gonna learn is they're not.
Well, over
I
time,
can't. Well, when I say, I mean like over time could be this summer. I mean, people will say one thing now, and then 3 months later they'll be doing the exact opposite, and they'll have an explanation for it. you know but from so those people you're talking about, they're speaking in their mind, the price of energy is just going to keep rising. They don't put any condition on it.
well,
Nobody never asked them how do hey, last quarter, you weren't saying that, or last year you weren't saying that. So like we'll see, we'll look at it on the chart. My answer is always going to be technical, because my answer is because we're overbought right now.
well, I agree
That's
with
my
you.
answer.
I agree on that point because one of the problems we have is like everybody want to be on the forefront and predicting what's going to happen because it's money in their pocket if they get it right, and now they can have bragging rights. You know what I'm saying? But
Yeah.
for I've been watching the price of fuel, not the price of oil per se, but just fuel. And
I think all of them are valid, whether you're watching oil, jet fuel, home heating oil, natural gas. I think they're all valid to watch, but the cleanest, straight ahead way is to let the dollar be your guide first. Because when you're buying that energy, you're betting against the dollar. When
You know
you
what
look
this?
at the dollar, you kind of see, you could just extrapolate that entire energy complex is going to trade inverse to whatever the dollar is doing. Generally speaking, that's what's going to happen.
You know
Well,
what this
that's
is going
what
to do?
had.
It could.
Go ahead, Mike.
No, I was just going to say that this actually is going to push a lot of people into this bike sharing bike sharing market that's emerging right now. This whole micro transportation thing. Um, I'm seeing a lot of people in Boston pick up these Lime scooters or these Bird scooters, these electric bikes that I haven't seen like
I think Mike dropped off, or is that me?
I was just about to say,
Yeah,
Mike.
I think Mike did drop off.
Hey, I'm mute up for a few minutes.
Like
Okay.
the other day we were looking at scooters, and I live in Florida, and I saw
Hmm.
the price of gas here has gone up from about. I mean, I talking about fuel for automobile fuel has gone up. I don't know, probably about 50 cents. And right now I'm looking at a scooter to park in my car. You know, if it rains, I drive. If it's not raining, I'm scooter.
Wow. So into the scooter.
Yeah, I yesterday I went to look at one. I looked at electric and I look at the gas powered, both of them.
So so you looking to buy one? How much does it cost?
Well, when I look at it's anywhere from 2,000 to 4,000.
Wow.
The actual electric scooter that I want, I have to import it. But as they also here, there's one made in Taiwan called GoGo that
Hmm.
they have charging stations all over Taiwan. They're building it out, so you just drive up to a charging station, pull your battery out, put the old battery out of your thing in, and you go.
Wow.
I'm looking at I pulled up gasbuddy.com. For those of you who don't have the app, you should actually download it to your phone. It's actually pretty good. Um, looking in the District of Columbia, regular right now is pushing 299. Let's see if I can pull up Chicago. Chicago, Illinois, 349.
And I got a bar chart link in this thing here for you to click on, Mike, later. It's an oil thing, U.S. oil, spot price of oil.
Yeah, 299. It's the
Yeah, that's
cheapest
up
down in
there, man.
Miami. Yeah, it's getting to a point where I think I paid what, maybe 297 last week.
Yes, that's serious. I mean, we've been this energy and has been on a vicious run since Christmas Eve. You know, all that commodity play has been hurting the dollar since Christmas Eve. That's been serious. So that's been a pretty good investment, pretty good trade. You know, but
Hmm.
that recent decline, I'm looking at the U.S. oil fund started in October of since October of 2018. When oil took a big fall starting in October of 2018, it fell from October of 2018 until Christmas Eve. You know, right around that time, we've had a serious bounce off of that decline, but we've not taken out that high.
Hmm.
So it's a natural response to such a steep decline in oil. U.S. oil fund was around $16, and it fell to like $9. Not quite a 50% drop, but you know what's that? Probably I don't know what's that 40%, something like that. That's pretty steep drop in 2 months. You know, 2.5 months. You know, so we've been in a recoil rally from that severe decline. But until we make a higher high, there's no technical reason to say we're going higher.
Hmm.
That doesn't mean it won't, but until it does, the bias has to be negative until it does.
Hmm. Hey, what's going on, Dr. Yaya?
Yeah. But the people on TV, that's what I hope to accomplish on this show is to have everyone have your reaction to be not who do you believe. Go look at the chart. Just go look at the chart and try to take into account the few very basic things that I show here about how to look at the oscillator, and you can see when it's overboard. You can see if the momentum is slowing down, and then you develop your opinion about, say, the next month or two or three based on what you see in the chart, and try to look at things like the weekly chart is, I think, better to look at than the daily.
Mm-hmm.
So that gives you a longer sense of perspective.
All right, let me get to this next one from CryptoBriefing.com. Today's crypto theory: Assange arrest sparks rage crash. The arrest of WikiLeaks founder Julian Assange could have prompted the crypto market slump today. At least that's one of the theories for today's $16 billion drop in the overall value of the market. Beginning in the early hours of this morning, crypto prices across the board have so far fallen by 7.1%. While that may sound like a stretch, it's not even the craziest theory we've heard this month. At the time of writing, Bitcoin was still holding itself above the $5,000 mark, but many coins in the top 30 are experiencing double-digit drops. The downward trend could continue as the American trading day begins. That's just the chart they're talking about for the 1 day. One industry figure suggested that the arrest of WikiLeaks founder Julian Assange may have sparked the sell-off due to growing concerns of increasing government surveillance. The source, who works in a senior position at a blockchain identity verification company, declined to be named in this article. Assange is a bit of a hero in the crypto community, they said over the phone. Now he's been taken into custody. People are worried about their privacy. The source explained that Assange is a widely respected figure, especially among some of the older figures within cryptocurrency. WikiLeaks have been one of the first businesses to accept Bitcoin after Visa and Mastercard blocked payments to it in 2010. The market began sinking hours before Ecuador withdrew Assange's asylum and stabilized at the $178 billion mark. The arrest was followed by another major sell-off, which caused the market to lose another $10 billion in value. Now that Bitcoin can be tracked just as easily as fiat payments, the source reasoned, Assange's arrest might be the watershed moment for governments to show off some new surveillance tools. Other figures in the cryptocurrency world expressed doubts that most believe the two events were unlinked. One argued that it was highly unlikely that Assange's arrest would have any correlation to the state of the crypto market. Humans trying to understand situations sometimes fall into the trap of linking two completely unrelated events together. They said, much like the tenuous connection with a certain April Fool's prank, the market movement may have been a mere coincidence. The drop was a surprise as market sentiment appeared to be improving. Dave Hodgson, director and co-founder of NEM Ventures, told Crypto Briefing that the sector may have been too early in predicting the end of the bear market. Sentiment could have turned sour yesterday after New York regulators rejected a bit license application from Bittrex. The exchange now has 30 days to shut down its operations in the state. Maddie Greenspan, the senior market analyst at eToro, hypothesized out the market slump could have been a reaction to the U.S. Federal Reserve, which suggested yesterday that the lowest interest rates over a long period of time could have caused financial instability. correlation does not necessarily mean causation. But what we can say is that in the 30 minutes following the announcement, Bitcoin experienced more volatility than gold, the Dow Jones, and the US dollar combined, Greenspan wrote in an email. Bitcoin in the last 6 months has gone through long periods of relative stability, followed by short and highly volatile price movements. We don't have a chart in front of us right now that can look at the weekly, but I don't doubt that Assange's arrest could have scared a lot of people. That was unexpected. I mean, we were already talking about this on the geopolitics on Wednesday. That in the final stretch that there was an arrest for Assange coming, whether it was 6 months from now or maybe December or something like that. There was something coming. We had no idea, in particular, that it would only be a few hours after we ended the hangout that he would be arrested. But that could very well have sparked a lot of people, I should say, to start dumping, because people who buy cryptocurrencies tend to be a little bit more risky, but they're also paranoid from a privacy standpoint. So they're always trying to make a move without being seen, but are willing to take the next step to have more privacy. And if they're suspecting that that Central Intelligence or National Security can actually track all of these coins that were once unseen before, they're probably looking at the market and saying maybe it's a good time for me to get out.
Yeah, I would. Yeah, that's just the classic fundamental versus technical. I think I said last week when I was looking at Mike. Can I just short real fast? I'm not gonna spend a long time on it. Just to show,
Right
just to show the Bitcoin.
Mm-hmm.
Okay. I guess that would be the entire screen. Okay. All right, let me throw this away. All right. Okay, can you guys see this?
Yes.
Are you able to see it? Okay. Okay, this was the high when everybody like, wow, was happy. Then this was the low and it bounced back. Now, this low was 580302. Yeah, 580302. So we broke through that floor and we just been retracing our steps back up to that. And as I said, technical analysis, the support often becomes resistance. And I believe I said last week that the whole show is Bitcoin gonna crash through that ceiling, which was prior support? So everybody's looking at it, asking the same question, all the technicians. Now I'm going to just say straight up from a purely technical interpretation, looking at this weekly chart, because this little stubby small candlestick is this week. You see that green part is very narrow. That suggests that the trading range is narrowing, and often that happens when the price is about to reverse. However, we did not make a lower low. So although I am bearish on Bitcoin, until we make a lower low, someone that's bullish can say we're still going higher. And I can't argue with that because we have not made a lower low. This candlestick from the week before, this low of this candlestick is still holding. Let's see, the low was 49.1321. I'm looking in the information box where it said low 49.1321. This week's candlestick was 5,000. So no. So the uptrend technically is still intact. So we're not going to know. So when the fundamental people say, well, it dropped because he got arrested. Okay, now I went to a daily chart. Nothing meaningful happened today. However, we are on the daily, we're overbought, and just I don't think it's a good bet that we go higher. But if somebody was to say, okay, I'm going to stay bullish Bitcoin, but if it takes this low out, then I'm going to, look for a time to get out. Now, that's what I would be doing. But if somebody wanted to just hold, just to see if it crashed through, because they're thinking this could be it, technically I would have no argument against that strategy. So it's the story is not over. We left this week, ended on a cliffhanger with regard to Bitcoin and what's really happening, because that candlestick, it may have taken out low from earlier this week, but it didn't take out a candlestick on a weekly chart. That will be much more significant. So it's kind of the bulls and the bears are fighting it out right now with no clear winner on Bitcoin. But that resistance, or that ceiling which was prior support, that's going to be pretty hard to go through. And we see the trading, the candlestick. So we see it now, the trading range narrowing right now too. So I'm sorry. Go ahead, Mike.
We have 30 people watching, 20 likes. Hit the like button, please.
Oh, I'm sorry. I forgot y'all to hit like. Am I the only one? I just hit it just now. I made it go to 20. I can't be the only one. Hit it.
Yeah. Let me get to the next article.
We can't get 21? Oh, come on. There you go. 22. There you go. All right. Solid. Go ahead, Mike.
Now, I'm not sure if Lionel is back. He has anything he wants to say about Assange and the crypto bump.
Yeah. There's whenever crypto go up and down with any kind of surprise, there's always 2 or 3 articles that come out at least that says, oh, it went up because of this, it went down because of this. It's no really definite answer. And for them to say it went down because of Assange was arrested, to be honest, I don't buy that. Because now at this time, yeah, people who were giving to WikiLeaks did in Bitcoin, but I don't think it's that many people who are giving to WikiLeaks that are invested in Bitcoin comparative to the entire market. So now you're telling me that those people who gave to Bitcoin or gave to WikiLeaks and Bitcoin are going to get out and forget about the profits they can have if they were to keep their Bitcoin. It just don't make sense to me.
No, when you think about it, no. So it's like everybody's conviction is just ruined that fast. It's just over. Their faith is shaken that quickly.
All right, next one is from Forbes.com. Coinbase and Visa are making Bitcoin, Ethereum, Ripple's XRP, and Litecoin payments a reality. Bitcoin and other major cryptocurrencies, including Ethereum, Ripple's XRP, and Litecoin, have long struggled against accusations they are harder to spend and use in the real world than their traditional fiat counterparts. The Bitcoin price, which leaped higher last week to trade around $5,000 per Bitcoin, has been called too unstable and volatile to be used as a means of payment, resulting in Bitcoin and other cryptocurrencies being used more of a store of value like gold than traditional means of exchange currency. Now, major Bitcoin and cryptocurrency exchange Coinbase has teamed up with global payments processor Visa to try to change that, launching the Coinbase card, which allows users to spend crypto as effortlessly as money in their bank. The Visa debit card, which has a $6.50 card insurance fee, can be used to spend Coinbase Bitcoin, Ethereum, and Litecoin balances in millions of locations around the world by converting the cryptocurrency to fiat when the card is used. The merchant or store gets paid in traditional fiat currency. Coinbase users can choose which cryptocurrency is used on the card through a new app which supports all crypto assets available to buy and sell on the Coinbase platform. The app also offers instant receipts, transaction summaries, and spending categories to help keep track of their spending. This is the first debit card to link directly with a major cryptocurrency exchange, allowing people to spend their crypto balances direct from their Coinbase account. Coinbase said in a statement announcing the launch of the card. Previously available crypto cards required users to preload a specific amount of crypto on their card, in addition, adding a point of friction to the process. The Coinbase card is currently only available in the UK, but San Francisco-based exchange, which was valued at $8 billion in October, plans to roll out support in other European countries in the oncoming months. There are no plans yet for support outside of Europe. While Ripple's XRP isn't currently available to trade for UK Coinbase users, others in Europe will be able to spend XRP on the card once the service is rolled out in their country. This is Coinbase is becoming like their own crypto reserve. Like they seem to determine which way the market shifts from an exchange standpoint. Lionel, would you agree with that?
Yeah, Coinbase is becoming a bank. Now, per this article, um, I don't know if we covered. Did we cover the 225 million Lloyd's in London backing, or did I send that through the emails? I can't remember.
Mm.
I can't
I
remember.
think we did. I think we did. I think we did
Okay.
mention that on the show.
And they're already FDIC insured, so they're becoming a bank, a crypto bank. Now, per this article, it's first it said cryptos. It mentioned the commonly said talking point that cryptos are too volatile to spend. It's too volatile. It's too volatile. Blah blah blah. Then they went from that to we're gonna help you spend your volatile, your cryptos that we just said the paragraph before is too volatile to spend. That's to me is a contradiction. Now people are spending cryptos. You have retailers that allow you to spend cryptos at their store, and what it do is what happens is whenever you swipe your card, you are given a spot price of Bitcoin or whatever cryptocurrency you're spending. Then you're charged at that spot price. Now, what they're doing here sounds much like what MasterCard put a patent in for last year when they said that they were going to release a credit card that allows you to spend multiple cryptos and fiat on one from one card. So it sounds a lot like that. And it goes to show how Visa and MasterCard are getting into cryptos as a middleman where they don't want to be left behind. But that's how I feel about this.
I think people are going to have to be smart about which currency to use. If you're going to the store and you're buying, let's say, a pair of shoes, you know, a couple $100, you're getting something nice. Now those shoes are going to decline in value. That's not an appreciating asset. Now I got a choice. I can pay for those shoes with a declining at this point. Let's say the dollar is peaked and the dollar is starting to come down, and all the cryptocurrencies have like hit the toilet and now they're starting to rise. Now I can choose. Do I buy those shoes with a currency that's losing value, or do I buy those shoes with one that's gaining value? The smart choice in that situation would be to choose with fiat currency and hold on to your cryptocurrency because it will be too valuable to spend if it's appreciating. You're going to hate those damn shoes if you spent cryptos for it.
But most people are not going to think like that though.
I know.
Because
So if most people are not going to think like that, know that Visa and them are banking on the ignorance of man.
oh, it's going to be a lot of
Pun
ignorance.
intended.
Huh?
Yeah, it's money. It's why puts it PT Barnum sucker born every minute. You know, it's that's a good bet that man is going to do the wrong thing. So Visa said you can have your shoes. Would you like to buy those shoes with cryptocurrency?
And then charge you a fee on top of that.
Yeah.
BJS
But
asked
you
you a
really
question.
just made okay, let me go to the. Let me see.
Especially if they give you a rewards points for spending your cryptos, or give you double rewards points for spending your cryptos.
I'm sorry. Which this is BGS? You saying?
Yeah,
Or
BJS
who
asked a
is it?
question. Is more volatile than Argentine, the Argentine peso. For those of you who don't know, the Argentine peso is inflated, probably 1,000% or something like that. So.
You know, I gotta look at that on the chart. It's probably not. Oh, that's a good race right now.
He was joking. He was joking.
Yeah.
Yeah,
It's like that's a no-win situation right now. But I tell you what, no, even in that, I'm gonna tell you, I look at it like a trader. I look at stuff as opportunity. You know, like the thing that everybody's hating the most. You got to look at that on the charts for an opportunity. Even that dog will have its day, you know. So you got to take some what do we call it? Vegas money, a small little money, and use the charts to kind of time it and see if you can hit a lick, you know, because that's where the opportunity is, getting in early, you know, with some stuff. But you don't do that based on emotion. You do that, you know, based on technical analysis to the to the full extent of your understanding of it, you know. So I'm
Let me
going
get
to
to this
be
next one.
interested in those what do we call them, shit coins. I'm going to be interested in those because that's what opportunity is. That's like the penny stocks of crypto. You know, along with XRP and Ethereum, I'm going to be interested in a couple of those too.
Yeah, where's Maddie goes when we need him.
Yeah.
Next one is from CryptoBriefing.com. Bitcoin USD technical analysis. Bullish breakout intact. Bitcoin has a neutral short-term trading bias, with the number of one cryptocurrency now attempting to correct lower after recently spiking to a new 2019 trading high. Bearish MACD and RSI price divergence is present on the 4-hour time frame, with the bearish price divergence extending down toward the $4,800 levels. The 4-hour time frame is also showing that the BTC USD pair has now slipped below trendline support, with the $4,950 level the strongest form of near-term support. This is their chart. It looks similar to what Dollar Will was pulling up, so Dollar Will wasn't too far off. Traders should note that a bearish head and shoulders pattern could start to form on the 4-hour time frame if the recent pullback gathers pace. The relative strength index indicator on the mentioned time frame is also bearish, with negative RSI price divergence present. The MACD indicator on the 4-hour time frame is bearish, with negative MACD price divergence now present. Bitcoin remains bullish over the medium term, with the number one cryptocurrency maintaining its upside above its 200-day moving average. The daytime frame continues to highlight that the recent bullish breakout from the fallen wedge pattern still remains intact. Technical support from the upper trend line of the fallen wedge pattern is now located close to the pair's 200-day moving average, around $4,650 level. Technical indicators on the daily time frame are starting to correct from overbought conditions, although they still remain bullish. We already went over this. I think Dollar Will has already looked at.
Yeah,
Dollar
I
Will, you
can
didn't
show
pull
that
up the
Mac.
chart, did
I
you?
can show that MACD thing if you want. I got the chart ready. If you can do that real quick,
Uh, Go right
just to
ahead.
just to clarify what they talking about. Let's see. MACD, that stands for Moving Average Convergence Divergence, and basically, if I guess I can sum it up and say it's measuring momentum. This is the MACD down here, and you see the stochastic is giving you similar information. I usually just use the stochastic, but there's no one is better than the other. They mentioned RSI, that stands for relative strength indicator. It's going to look like these. So most technical traders, they'll pick one or two and pretty much stick with that, you know. So this MACD here is showing you that there is a declining participation in the trade. Okay, the number of trades is declining participation. I equate that to, let's say, if you've been to an auction, the auction will start out with a lot of people bidding on a product, and then that over time there'll be two idiots bidding on this high price, and everybody else was smart enough to sit their ass out on the sideline because they're like, I'm not paying that for that. But these two idiots are in a pissing contest to see who's the richest, and they're just going to pay up to the moon. That's what you're saying. This decline is showing you the general market is gone to the sideline. This is the lack of interest, but the price is going higher with a smaller number of participants. Now, it doesn't mean that it's going to die right from. Basically, we're in the oversold state and this is the 4-hour chart, 240 minutes on bar charts. We are in the oversold state on the stochastic on the 4-hour chart. There's nothing stopping this from rising up and continuing to make a new high. It could do that. Now, I'm not going to bet. I am against that bet that we're going to take out that ceiling at what was it, 5,300 or whatever. So you're really betting that this thing is going to keep running after it's already made a pretty vicious rise since Christmas Eve. So the money has already been made. So even as we go from oversold back up to over what the technical traders are going to look at is when we go up to the overbought area, will we make a higher high? If we don't, then that's going to make people really get out of this thing. If we do, that's going to embolden the bullish camp, the and encourage them to continue riding it on up. But that's what they're talking about in the article. The MACD, this is what they're talking about, showing declining participation in the trade, and so is the stochastic. But the price didn't really follow that, you know. So you'll see way back here on. I'm looking at the information box. I'm looking at the MACD peak around April 5th. That was a week ago. So the participation in that trade has declined since last Friday, but the price is kept went higher, and then it came down a little today. So the jury is still out about where we are with Bitcoin. We'll see. Next week we should get some clarity. Back to
All
you
right, thank
guys.
you for that. Let me get to this next article. All right, this next one's from Crypto Briefing again. Litecoin USD technical analysis, bearish double top. Litecoin remains bullish over the short term, with price still trading above the LTC USD pairs 200 period moving average on the 4-hour time frame. The 4-hour time frame is showing that buyers were unable to move price above the $100 level earlier this week, which has created a bearish double top pattern formation. Key technical support to downside is currently located at the LTC USD pairs 200 period moving average at $66 and the $61.50 level. Traders should note that double top pattern formations are typically bearish reversal patterns. The relative strength index has turned bearish on the 4-hour time frame and is showing that selling pressure is increasing. The MACD indicator has turned bearish, with the MACD signal line and the MACD histogram turning lower. Litecoin remains bullish over the median while trading above its trend-defining 200-day moving average, which is currently located at the $46 level. The daily time frame shows an even larger inverted head and shoulders pattern has now formed, with price retracing back to neckline of the smaller inverted head and shoulders pattern. The smaller inverted head and shoulders pattern on the daily time frame has yet to reach its target of $120. The larger inverted head and shoulders pattern has a larger upside objective that would take the LTC USD pair closer to the $160 level. That really makes me furious. Let me just go to this conclusion real quick. Litecoin is starting to come under downside pressure in the near term as the bearish double top pattern on the 4-hour time frame increases technical selling. Over the medium term, bullish bias surrounding the LTC USD pair will remain intact while price trades above its 200-day moving average and the bullish patterns on the daily time frame remain valid. This is a 1-month chart of Litecoin moving on the day or moving on the month.
Yeah, to put all this in context, later when I really get to the chart section, we'll bring up the dollar, and then we can, remember what we're talking about related relative to oil and all these cryptocurrencies that are quoted as relative to the dollar. You see, like Litecoin versus the dollar, Bitcoin versus the dollar. So if the dollar is strong, that's going to create negative pressure for those things, and if the dollar is weak, that'll create room for those currencies to rise. So everything comes back to that dollar.
Mm-hmm.
So I can show that later, or so yeah. As long as the dollar looks like it's got some fight left in it to go higher, that's going to be negative for energy, metals, and these cryptocurrencies that are quoted paired with the dollar.
Yeah, BGS says that it looks like a negative fishhook.
Yeah.
All right, the next one is from CoinDesk.com. The SEC just released its long-awaited crypto token guidance. The U.S. Securities and Exchange Commission has published fresh regulatory guidance for token issuers, nearly half a year in the making. The guidance focuses on tokens and outlines how and when these cryptocurrencies may fall under a securities classification according to the document. The SEC Director of Corporation Finance, William Hinman, first revealed that the regulator was developing new guidance for crypto tokens last November, and other members of this agency, including FinHub, had Valerie Shishpanik and Commissioner Hester Pierce have repeatedly said that the SEC staff was working on the document. In November, Hinman said the plain English guidance would help token issuers easily determine whether or not their cryptocurrency would qualify as a security offering. The guidance includes examples of both networks and tokens that fall under securities laws, as well as a project which does not. Lionel, you sent this piece in. What's your take on it?
All right, my take on this is in the past, we've been speaking about how the US is not going to take a definitive stance on these cryptos in terms of what is a security and what is not a security, because it's a Pandora's box. If you say, oh, Bitcoin, Ethereum, XRP is not a security, well, what about the other multitude of cryptos? It was a Pandora's box. So they let the market do what it's do. They let the market somewhat define itself. Now we're seeing this framework, still not quote unquote definitive of saying this is security and this is not security. It's a framework, which means if it meets these criteria, or if it, instead of using the Howey test, which was started back in the 1930s, if this new asset meet these frameworks, then it may be this or it may be that. It's a guidance. So it's a start to me. It's a start. It helps people guide. Though for those who are investing in cryptos that are not as gunslinging and gun ho as others, it provides them a guidance on what to invest in and what they may not want to invest in.
Mm-hmm.
So basically, we're probably going to get some clarity after everybody files taxes this April 15th, right?
Could be. You
Some
never
people
know.
want to, yeah, it's going to be some audits, and then over the next year, we'll see what floated and what didn't. But I think it's mostly it's political. Some
Yeah.
some the whales are they're going to be cut a break. Okay, they're going to decide that, okay, this is not a security, and so it's going to make, from a tax point of view, one thing will be more favorable to invest in than another, and that's probably where the whales are going to be. So we're going to have to pay attention and see which one is going to get the favorable tax treatment,
But
and we'd be wise to kind of
even then,
flow
it's
that
still
way.
unclear because in yesteryears, Bitcoin was the crypto reserve currency if we want to invest in one coin or another. And let's say um, let's say they say Bitcoin is not a security, and you already file your taxes as if Bitcoin was a security. That it's
Well,
like
see,
looking at
now that they're
chips.
clarifying things, they probably just gonna, like, looking the other way on a lot of stuff until this clarification really gets clear. Then after this tax year, a precedent is going to start to be set. You're going to have all these tax forms coming in, claiming and not claiming cryptocurrencies, and the position of the IRS is going to determine what the rule is. After a year, the accountants are going to know. The accountants are going to know what floated, what the IRS treated as a security and what they did not. So it might be easier. We might understand it better through their actions as opposed to their guidance through their language. Their actions may speak louder than their words. When we just see in retrospect how they what was taxed and what wasn't, who got audited and who was forced to claim these transactions regarding this crypto, and what floated and what did not.
All right, this next one is from newsbtc.com. Real world crypto payments come into South Africa. DosX and PundiX team up. South African crypto exchange has partnered with an international blockchain-based payment processing firm. The merger between DosX and PundiX will allow early cryptocurrency adopters to spend their holdings in real-world locations in South Africa. With millions of South Africans living without access to banking facilities, the merger could help drive digital asset adoption in the nation. According to South African technology publication IT Online, local exchange platform DosX will work with global blockchain payments firm PundiX to introduce the latter's XBOS point of sales devices into retail locations. South African crypto users will soon be able to top up PundiX's XPass cards with various digital currencies and spend them in real-world shops. Crypto supported by PundiX's XBOS devices will include Bitcoin, Ether, and Binance Coin, amongst others. The goal, according to the startup's website, is to install a minimum of $100 of these point-of-sale units by February 2021. 100,000, I should say, sorry. The system is ideal for those lacking banking services since it allows digital payments without needing a traditional account. However, the two startups are obviously hoping to appeal to more than just those living in South Africa without banking facilities. The service works using a familiar credit card-sized payment card, which requires tapping on the terminal to make a payment. This decision to make the process the same as making a contactless bank card payment has been intended to appeal to those already familiar with such payment methods, while still being accessible to those who are not. Lionel, what did you think about this?
Remember when we spoke about how a lot of these cryptos will not be adopted until when you go to the store and you keep seeing that symbol of that says XRP, that says Ethereum, or that says any other crypto. What they're doing here is getting their name and their logo out, making it prevalent, saying that you can pay with us, and making it easier to obtain those coins, those cryptos, in order to pay. PundiX already has point of sale machines where you can, like the article said, you can tap your card and it pays. So this is what they're doing, in my opinion, is getting their name out, knowing that South Africa is one of the countries in the world that's leading in crypto adoption. A lot of African countries are. So they're getting on the ground for early, and they're getting their name out there. So by the time the crypto market does explode, they already have a name for themselves in this country that is a leader in crypto adoption.
Yeah, this is a part of the whole entire digital infrastructure talk that was had last week at the World Economic Forum. So this is a part of that entire cultivation. So it makes sense.
Yeah, I mean, when you just on with the theme of crypto is here. It's that's beyond debate. You got major banks and credit card companies and nations around the world. It's here. So get with the program. You may be getting a crypto paycheck. That's probably when people are going to really get it, when they get paid, when their paycheck comes in a cryptocurrency.
You may not get a paycheck. It may just show up in your inbox.
Right.
It's not going to be written on a piece of paper. There's no reason for it to be written on a piece of paper anymore.
Right.
All right, this next one is from Forbes.com. Why most index funds and ETFs are not good investments. Many investors confidently tell me they have discovered the secret to investing. It's all about passive, Bob. I'm glad they are happy and comfortable with their investment strategy. Unfortunately, I think they are missing some important facts. Most index funds and exchange traded funds, ETFs, are below average investments. Here's why. Recently, Fidelity published a study, page 11 in this link, that shows active investment management beat passive in 12 of 18 investment categories. The study also displays the excess returns. There was only one investment category with significant passive outperformance, large cap growth. In all other categories where passive outperform active, the excess returns are minimal, less than 1%. However, in those categories where active beat passive, 67% of two-thirds of all categories, the excess performance was almost always at least 1%. All returns in the study are net of fees. I know 1% doesn't sound like a lot, but compound over a 40-year working career, it adds up to a lot of money. Active beats passive in most investment categories because inefficiency still exists. 3 of the 6 asset classes where passive beats active in Fidelity's study are large cap value, large cap blend, and large cap growth. This this shouldn't come as a surprise to anyone. U.S. large cap stocks are the most analyzed securities in the world. It is hard for anyone to discover a fact about Apple that a lot of other people are already aware of, and that isn't already reflected in the price of Apple stock. Although it is difficult for active managers to beat their indexes in asset classes that are highly researched and followed, there still are many asset classes where inefficiencies abound. Those investment management firms that have research expertise and marginal talent in those areas can and do significantly outperform their indexes over a full market cycle. So, Dollar Will, I'm not sure if you read this whole thing yet. What's your take on this?
I want to puke. It's crap. Listen, they said, I just checked what they said. They said that it, okay, first of all, there's been lots of information over time that shows that those professional managers, they don't do a better job than the common person. James Cramer from CNBC has written that and had, pointed out studies in his many books. What's the brother Jonathan Bogle from what was it? I think he was what was it Vanguard? He pointed that out many, many, many years ago. And even in this article, in that top paragraph where they talked about the one category where active managers did not beat passive advantages, that was large cap growth. What large cap growth? First of all, large cap that's the S&P 500, the 500 largest companies by market cap. Market cap is basically if you took all the stocks that have attracted the most money in terms of investment in the stock market. And that's now the large cap growth, that would be a company like Apple, Netflix, Facebook, Google. Do you really need, and so they're saying if you're buying those types of companies, you're beating an active manager. Well, those are the companies that people know, and those are the companies that are in your retirement account. So people are mostly buying the S&P 500 if they don't know how to, pick individual stocks. And so even by their own admission, that you're beating active managers with that. Well, in the story, everything else comes with more risk. If you're talking about small caps and mid caps and other special categories, well, yeah, you're gonna need more information in order to make a wise choice. But the average person who who doesn't know how to pick stocks, they're probably just going to stick with the S&P 500, and so they're doing just fine by picking the SPY. So all that crap that they're talking in that article is just a way for managers to make money, because the citizenry has figured out that I can buy the S&P 500 all by myself. I don't need to pay this guy a fee, and my results is going to end up being about as good as what he's going to come up with. So this is just Wall Street guys crying about the fact that they're losing money because you're not buying them, you're not paying them for their services.
That's exactly what I was thinking when he was reading that. Because even in funds, like I buy Fidelity fund, and if I buy a Fidelity fund, it tells you how many large cap, it tells you exactly 25% of this, 10% of that, and it normally comes out ahead of these guys who want you to put the money in their hands and let them invest it anyway.
Right. So I invest in ETFs, but I invest, I break it down by industry, and I'm dollar will. So anything in energy and metals related, dollar sensitive ETFs. That's pretty much the way I go. I don't get into buying individual companies because I don't care about if the leader dies, if the CFO steals money, or if there's some class action lawsuit against that company. I don't have time to be caught up in that. I just buy a whole industry because that industry is set to either rise or fall based on what the dollar is doing. That's my methodology, and that's why I'm dollar will.
And Dollar Will, just to add one more thing, a couple of days ago, you sent through the email something saying how P&G increased their dividends. Well, me
Right.
personally, I go on dividend.com and I learn a lot more about dividends and how people make, depending on the X date and depending on other things, people may jump on a dividend and jump out. So those little nuances of the industry, they are the same things these fund managers know.
So
So
you are an income investor. That would be
yeah,
you'd be and there are ETFs and mutual funds that specialize on high dividend paying companies.
right. But the point I'm getting at is a lot of the information that these fund managers may know, regular people know. Short
Right.
of short of them working for a big company, and short of them maybe knowing technical analysis, they there's no need for a lot of people to manage funds nowadays.
No. I mean, what cracked the code for me when I was really trying to learn, James Cramer's books are very good, and they're written in like plain simple language. And once again, this is when I was a fundamental trader. But he does a good job of explaining it. Really, really good. And I felt confident to make the decisions on my own after reading his books. And, when you read his books, you understand that fundamental way of evaluating stocks. And then then you hear other analysts talk, and you read their articles, and based on that foundation of understanding, how they, looking at the growth rate and the debt levels and stuff like that, that you feel like, well, I know I have a handle on this just as well as they do. That comes with time. And so yeah, these Wall Street guys are losing money. They're losing money between, you got trading bots out here, you got people walking around with charts on their iPhone and Samsung phone, okay, and people are just got all this free information online. Nobody's paying these guys anymore, and so you're going to see a lot of them guys continue to get cut. You're going to see big layoffs in these big financial firms because nobody's, these guys are not really adding value. So.
Yep, that's one of the things that AI is going to do is take out a lot of them.
Yeah, exactly.
All right, this last one is from abcnews.com. Georgetown students vote overwhelmingly in favor of $27 fee for slavery reparations. Georgetown University could become the first college in the nation to mandate a fee to benefit descendants of slaves sold by the university nearly 200 years ago. A debate that takes place against the backdrop of a broader political conversation unfolding on the 2020 presidential campaign trail about reparations. By almost a 2-to-1 margin, students approved the measure, which still must be approved by the university to go in effect. The school's undergraduates voted Thursday on the referendum, which would increase tuition by $27.20 per semester to create a fund benefiting descendants of the 272 slaves sold to pay off the Georgetown Jesuits' debt, a move that saved the university financially. Todd Olson, Vice President for Student Affairs at Georgetown University, in a statement issued after the vote, lauded the students' efforts, saying, University values the engagement of our students and appreciates that the 3,845 students made their voices heard in yesterday's election. Our students are contributing to an important national conversation, and we share their commitment to addressing Georgetown's history with slavery. The university has filed to carefully review the results of the referendum, and regardless of the outcome, will remain committed to engaging with students, descendants, and the broader Georgetown community and addressing its historical relationships to slavery. Matt Hill, the university's media relations manager, told ABC News in a statement. The Jesuits sold my family and 40 other families so you could be here. Sophomore Melisande Short Colomb, a Georgetown student, said during the town hall to discuss the issue last week. She's one of the 4 students currently attending the university under an admissions policy that considers the descendants of 272 slaves as a legacy students. The group also includes Elizabeth Thomas, who will receive her master's degree from Georgetown University in May and is a desk assistant at ABC News in Washington. She's a descendant of Sam and Betsy Harris, who were enslaved and sold by Georgetown University in 1838. If the current referendum passes, it's unclear whether Thomas would receive any reparations in the future. A week ahead of the vote, Short Colomb joined 100 other students packed in the Georgetown Levy Hall on campus, and as the gathering mulled the impact of the proposal. No one in this room was here in 1838 when this happened. She said. She still thinks the funds could help make amends for the university's slaveholding past, but we have a chance today to make a difference. So I'm going to pay my $54, she said, referring to the 2 semesters before she graduated. A long-standing political debate. The conversation on Washington campus reflects a larger discussion as reparations take the stage ahead of the 2020 election. A number of Democratic presidential candidates have weighed in on the issue of reparations for African American descendants of slaves. Hashtag ADOS. The issue of reparations isn't new. It's been continuously refuted since the end of the Civil War. One of the earliest proposals came more than 150 years ago, when a general suggested Confederate-owned land should be confiscated and divided up to people to provide the family of freed slaves 40 acres and a mule. NAACP President Derek Johnson supports a reparations measure originally introduced by Representative John Conyers, reintroduced in every Congress since 1989, aimed at creating a commission to make recommendations concerning any form of apology and compensation to begin the long-delayed process of atonement for slavery. Um, Donald Will, what's your take on all of this? Not sure if you've been following this thing about Georgetown University.
So you hear me? I was typing something in the chat. Okay. I just know I wasn't other than what you just read. I just think that we got to get it out of this. We got to catch up in the debate and stop debating the validity of ADOS. you know, they're Georgetown is already at the point of trying to quantify uh how much in the form of reparations and all. We need to be right there saying, how much we think it's we're due and what's the, how soon we want it. you know I don't think that I think the agreed should be setting the price. you know the quote unquote victims should be saying, look, this is the price and this is the method. We need to be right there instead of arguing about the validity of the claim and who among us is going to get it and all of that. So
Do
because
you have anything you want to add to that?
we could be given, we could end up in a situation where we're just offered something and it's like take it or leave it, and we will have wasted so much time arguing about who's going to get a cut that we're like not in a position to refuse what we're being offered. We got to get ahead and say, look, these are our damages, and we need to be debating. I know people have already come up with ideas about what the damages are, but that's what we need to be debating, that number, and pushing the dialogue. And we need to be saying to Georgetown and these other universities, this is what we think you should pay. And this is how soon in the installments you should be paying it. So what? We got to wait for this mountain of money to grow when they tack on, $27. I mean, no, pay us out of your endowment. You use that $27 that you tacking on to tuition to rebuild your endowment after you just cut us a check. Don't put my payment on no damn installment plan. You build your endowment back on an installment plan. Give me my money now on the front end. that's what we need to be, saying, hey, what do we think? Well, how do we think they should be responding? What do we want to happen? We got to get ahead of it.
Right. DE, you have anything you want to add to this?
Yeah, I agree with Dollar on that. They got to get out in front of this. They already know the numbers. The numbers have already been calculated. But what will happen if they don't get in front on the leading edge of this thing is that they're going to get lowballed. That's what people do. I mean, when you go to the bank tries to get as much money of you as they can. And if they got to give you money, they try to give you the least that you can. And that's what's going to happen. And if Georgetown gets away with this, then Citibank, Bank of America, all the banks in America, every bank in America made tons of money from slavery. Wall Street was built on it. So if these guys lowball and the students kind of like they set the precedent, then everybody's going to try to follow that precedent. And these students really, a majority of them don't know the history, so they're already saying money. Yeah, I need money for school, and that's what's going to. They don't want to pay a student loan when they get out. Have to pay 5 years of student loan, so that's going to be leading their thinking. And that, if you allow that to happen, you're going to lose a lot of money.
I know you have anything you want to add to this?
Yeah. Allow me to be the devil in the details. If they're talking about this, they already ran the numbers. If they're talking about this openly, they already spoke behind closed doors, behind curtains, and talked about it and ran the numbers and said, well, the numbers equals up to this exorbitant, to these exorbitant numbers. The people that are talking about it are not your friend. The people that are talking about and say, "Yeah, I agree that descendants of slaves need reparations," those are the people that are going to lowball you. Those are the people that are going to smile in your face, shake your hand, hug you, and say, "I'm on your side," and say, "We're going to help you get these reparations," as if they are some benevolent creature and or a person. I don't want to say a creature, but a person to say, "I'm on your side. I am this person. I'm a John Brown," that type of deal, and they're going to lowball you because you're going to trust this. Oh, this person is helping me. Wow, this it's 2019. The world has changed. They're helping me. No, what they're doing is getting out in front because this issue has become starting to become bigger and bigger. They're getting out in front because they know the numbers, and they're trying to give you as least as possible. That's the devil in the details, to me.
Yeah, this is like shut up money. It's like, all right, well, take this money, y'all just shut up. So, knowing that that's what it is, the number, the amount has to be the right amount because we might only get this one swing at it. Because the whole narrative about reparations and our justice denied, you know, that will change for the future generations. Let's say we get cut a check right now. Your kids can't make that argument no more. And what does America owe you? That you got paid. You got paid. So
Right.
we better make sure we get it right.
And I don't agree that it needs to come in one. Everybody get a check, one check, and that's it. That's nah. This needs to be a protracted, uh, year after year thing. It may not be in money. It may be in some. It may not be in money. It may be in something that will give us benefits. Because if it's a one check, um, fits all, cure all, we will. And I don't mean to laugh about this, but it's true. We will be in a worse situation after we get that check.
Dude, I heard somebody in the manosphere argue. They actually argue that they should be free to do whatever they want with the check, even if they wanted to go buy rims and Jordans. It's nobody's business but their own.
Oh my God.
Wow. Wow.
That's what I'm
So,
talking about.
wow.
We
I
will
mean, I actually heard somebody say that. They were offended that, we were arguing that, we need to make sure the money is put to use in a way that can lead to generational uplifting the race, through multiple generations. And they were like, no, that's my business to do what I want with it. I'm like, wow, no, this is everybody's business. This is
right.
not your personal business. This is the race's business.
Exactly. And
This is
now you have
family business. This is
eh,
no individuals here. This is family business.
right, exactly. But it's hard for these knuckleheads to figure this out because you're gonna if that guy's thinking about that, you're gonna have girls saying, "Well, I can get some new weave every week or every month, or I can get my nails done and put these Kool-Aid color hair in my head and eat lobster every Friday and wear these thin spandex pants, knowing that you fit 250 pounds."
What is it?
It's
What
gonna
is it? What is it?
it's gonna get
What is
live.
it? What is it? Fendi and Michael Kors and red bottoms.
Michael Kors,
That's what gonna get the money.
right? Michael Kors, Louis Vuitton, Cadillac, Buick,
And you
Chevy,
and you and you know and you
Hennessy.
know we gonna sell. You know we gonna
Man,
sell. We gonna be buying it. We gonna be buying it.
but
Well,
uh,
the original discussion before was that it would be issued in bonds and not in dollars. So we'll see what happens with that. I have a lot of faith in the bonds only because it holds the government accountable to that at least. At least it's written in it's etched in stone that it would be upheld by the federal government. But the idea of just buying stuff, that's the cash initiative that people are thinking. It's always down to this cash money, cash money, cash money. When originally it was about 40 acres and a mule, it was about land, um, land reclamation and things of that nature. And you have these discussions today with this generation of people. They always go to cash, and they don't think about the land aspect, and they don't think about the bond aspect of it. I think that's more important than the physical dollar itself.
Well, when you say land, it was that we were what agrarian economy at that time. So I would say it was business development money. It was seed money for business. So that could be whatever is necessary for today. It could be land, but not necessarily limited to it. I mean, if you had land back in the agrarian time, you could get a loan, you know, and that land was valuable. So that land was collateral. The bank gonna end up with that property if you don't pay that loan back. So here we today with no land, no assets, and we can't get bank loans and we can't get venture capital funding, as we were talking about in the beginning of the show. So it would have to, yeah. I like what Lionel said, multi-generational. I know BGS talks about, to really affect change, you need, what does he say? Like 3 generations, I think he said. I think he
Yes.
picked that. So yeah, we would have to have something, to something to spread across 3 or 4 generations. Hopefully, concurrent with that, we got some serious education so that we can, and I don't mean more of the same type that got us here, that got us confused and individualistic and anti Black American and anti-African. I'm not talking about that kind of education. I'm talking about something else. So yeah, if we have multiple generations of true education, and it came in a form of seed, and the reparations came in a form of uh, seed money, for business development. I think we would be on to something there.
This is a scary proposition because you're giving money to people who are not in a position, uh, not in a intellectual capacity to have a windfall of money. This is
And
a
another thing,
scary
I'm gonna
proposition.
take it. You know what? I'm gonna take it away from the insult of, "Hey, we're too stupid to know what to do with the money." I'm gonna spin it another way. We are too oppressed right now. We live in paycheck to paycheck. Yes, the white man got his foot on our neck. One false move, and we fall right out of middle class, right back into poverty, basically. Okay, and most of us are 1 generation out of welfare anyway, or right at the margin. So our primary existence in this country is at the margin or slightly above it. So just in because of that, we need to have the money spread across. And so as we get further away from the margin of subsistence living, then I think we'll be able to keep the money, because people, we get sick, man. We don't have health insurance, and just life events happen to us. And I mean, a fire happens, we don't have homeowners insurance. Life happens, and then just somebody goes to prison, and we got to give up what we got to get them out, or we got to give it to the lawyer to defend them. So that's why a multi-generational approach will help us make some strides in those other areas, which keeps us living at the margin. And once we abate that kind of pressure, then we'll have stand better chance to keep what we got. So some of it is, yeah, we just not raised with the proper value system. But then another part of it is we living on the margin. So, we would have no choice but to use the money to survive the present.
You got some commentary in the chat. Basically says that why would America support a plan that would lead to black people's winning 400 years and we still have learned nothing? I think we have to be realistic about what it is that you plan on getting back out of this. Uh, if you think you're going to usurp white people out of their land, it's not going to happen. Just in my opinion,
Well,
you're not going to get white people to get off of their land and give it to black people. It's just not. They're not going to do that to you
my answer
for
to
your.
that question, my answer to that question is why would they? It's not going to be because they're just swell folks and it's the right thing to do. It's the Christian thing to do. That's not it. I believe that I think that the demographic shift in this country makes it very clear that America, the United States of America, as a principally white led country, is not going to make it unless we make this pluralism work. Because we need all hands on deck. We need black, brown, we need the rainbow to be fully engaged, you know, in growing this economy. Racism in America is unsustainable. America is unsustainable with racism, given the decline of the white population. It can't happen. It can't work. And I think that smart white people have figured that out. That's why they're going to give it to us, because America is not going to make it. Europe can't even make it with. They need those Africans that they import in London. They need them. I think they figured it out. It's one world, and it's just so many of us, and our numbers are increasing over time in the near in the years to come, and their number is declining in the years to come. So if you want your nation, or let's just say that land mass, because we don't know about the geopolitics, if those land masses will still be constructed as these current nations, okay? But if you want some kind of life in that geographical area, you're gonna have to have some kind of policy that's inclusive for the people there, and the world is getting blacker, if browner, if not blacker, definitely. So it's a practical matter. That's the way I look at it. I think that enough white folks have figured out that in order to, if they choose racism or white supremacy, that's death for their country. It can't work. It's unsustainable. Maybe I'm overthinking. Maybe I'm being too idealistic. But when you look at the birth rate, I think they look at that. I think, what other conclusion can they come to?
To procreate with black people.
That's why you seeing all these commercials on TV. Every third commercial got an interracial couple. That's not your imagination. They are absolutely working on your subconscious. They're absolutely planting that seed.
Yeah, before you know it, Rob Gronkowski will get with some black female and talking about Hotep, brother. Where's the reparations?
Exactly. Exactly.
Pass the libation.
So again, they know these. Well, these people know these things. So now they're looking at a way to they're they're not looking at a way to, with this every third commercial. They're not looking at a way to uh, breed themselves out. They're looking for a way for it to survive. And they already ran the numbers. They already looked at the scenarios, and they know what's needed at the bare minimum. They're not gonna breed themselves out of existence. This is
The,
calculated.
the future of that white person is in a melanated body.
But that doesn't mean it's going to be a continuation of melanated blood. It may need to be one or two, and then you go back in order to reconstruct that white person with that added um, uh, gene. They're
Let me
not
say
gonna.
it. This is the way I think of it right now. It may not be, the person might be brown or black, or lighter, a beige or whatever. The issue for me is really, I don't even, I would, my primary interest is what's the mindset, what's the culture, what's the ideology of that person. So ultimately, I think this is about culture. It's tribal. One tribe is going to win. So the person or the people can be browner, but are you going to further the way? Which tribes, which way, which people's way is going to be further? Culture is defined as the way of a people. So which people and which way?
All right, now,
Is it, so if we keep being assimilated, then it don't even really matter whether what complexion we are on the color spectrum. If we think like a white imperialist, does it really matter what our color is if we have the mind of the white man? That's
now
why I can't get caught up in it. Race.
you said what? That's why you can't get what?
That's why I can't. That's why I can't get. I don't get to go but so far with the race. It's not enough for me to somebody be black. Just show up with black skin. I'm looking for some the culture and the ideology. Which tribal views are you advancing? It's not. It's not enough to me that you're not black to me in any meaningful way if you just show up with black skin and white thoughts. It's not enough.
All skin folk and kinfolk.
There you go. That's it.
Now, with us talking about this, there are going to be some black people that says, again, I'm saying black people, and you know what I mean, that say, oh, well, it's going to be a free for all. So it's a slippery slope.
Well, right now we're losing because we're getting we're not in control of the educational system, as BGS talks about, and that's not just an American thing. I mean, you hear some of these stuff, man. Our brothers on the continent, you can definitely see the impact of colonization on their mind. I mean, a job has been done on our mind all over the world. Okay, so it's not just us. I'm not just picking on us. It's a global thing. So when you look at what Mandarin, what happens? China's coming to Africa. What's the first thing among the first things they do is cultural. They put their flag down and say we're going to be teaching Mandarin here, and so the Africans are learning Mandarin.
You always adopt the language of whoever's in control of the global financial system.
Exactly. So that's telling you something right there. So who is assimilating into whom? Who's winning the cultural war there?
And you know what?
They come into your house and make you change your language. Who's winning the war? That ain't no alpha move. That ain't alpha.
I'm going to pass on this conversation on live because this needs to show time or place to discuss it.
Okay, I'm sorry, y'all. It's just been a rough week for me. I'm on fire. My Aries fire burning today. This ain't the day to poke dollars. This ain't it.
Oh no! I'm not trying to poke you.
I understand that. I'm not saying you're poking. I'm just being in general. This is just a rough day, man. I've had a rough day today. So I'll speak more truth today than I normally would. Okay. But yeah, no, I wasn't directing that to you, brother. No.
Oh no! I know. I was speaking about the more general population, and how the more general population would think about this topic. It's not as insightful as we would think about it.
No, because we're talking. It's okay. I'm 55. It's my generation's fault. It is my generation's fault. When we were having those in the 80s, the word was Afrocentricity. That was the word of that decade in the 80s. And we discussed things like worldview and how let's say different cultures around the world have a different perspective of the world that comes from their culture, the way they were raised, and so we would debate about if our view of the world as an American was in conflict with our with the view of the world, say of an African? Are our ideas or is our worldview our own, or were we educated to see the world this particular way? This is a dialogue we had in the 80s, and right around that time when Public Enemy and conscious rap got killed, because this is what the dialogue was with conscious rap. It was all the same thing. And the conscious rap music came out of this dialogue that was going on in the community. And when gangster rap came, it killed not just the music change, but the dialogue in the community changed. And then we had nothing to pass on to the millennial generation. So the dialogue just stopped. So now we debate things that's like decades old. That we answer questions that we already answered a long time ago. And it's my generation's fault. We weren't able to keep continuity in the dialogue. So that's why on YouTube, all of those as you say, quote, pro-black videos are all from the 80s. All of those John Henry Clark, most of those videos are from like the 80s and the early 90s. You know, that I was in my 20s when those videos was, late teens and 20s when those videos were out. So anyway, I didn't mean to stray, but we have to. That's the work that we're trying to do. And now on the positive side, when you see O'Shea got listeners in Africa. You got Brother Sarnetta, he got listeners in Africa. You got Phil Advise got a global audience. Dr. Mumby got a global audience, and all of them support each other. So I see us doing the right things to fix it, to repair, to pick up the ball. But it's gonna take time. And I see the support that the Black Manosphere is giving to the Black Brain Trust. I'm optimistic when I see that. I see the content changing on more people in the Manosphere started to diversify their content. They still talk about the normal stuff, but they're starting to put in some good, like, news information in there as well. So it's coming. It's coming. So I'm looking for the bright side. Now I do see some some bright in it, but you millennials you guys are in your 30s, man. Y'all got a lot of work to do because we old. So y'all are young, and so in the next 20 years, man, y'all gonna change the world. And I think y'all gonna be able to do it. I think y'all gonna be able to do it because you guys are more red pill. See, not everybody. Let's say this generation, old Generation X and the boomers. Not everybody in that era was red pill. See, it's cool to act like you were now, but the truth is, it was a struggle for us to get them to, quote, be conscious. Okay. So it was always a fight. It was never a popular thing. We were the outliers, weird, and they, just like y'all say, pro-black as a derogatory thing. Well, they had theirs. The dominant Black community called us names too. So it was never popular to be on this red pill game. But I think you millennials, the mainstream of millennials is more conscious, I think, than we were in terms of large numbers because of the internet. So I think y'all will be able to take those big steps forward. Did y'all cover the story in Africa where they're like, various countries in Africa, they're shutting down the internet, trying to slow down the flow of information? That's the only thing that could stop the millennials from wrestling some power from the establishment and turn power over your mind, your ideas. And I think you guys have a powerful tool with the internet, and even amidst the fuckery, there is good work being done. You know, even if it's 10% good and 90%, you know, effery, that 10% can make a heck of an impact.
Mhm.
Thanks for letting me rant.
No
Yeah,
problem.
it's your soapbox, bro.
I
Did you want
feel
to
better.
spend the last 15 minutes? You want to spend the
Oh
last
yeah,
15 minutes of the show pulling up the charts?
yeah. Let me bring up the dollar. You guys go ahead. Uh, let me see what the USD is.
There was a
Okay.
oh, are you pulling up right now, Dollar Will?
Yeah, go ahead and filibuster for me.
Okay, yeah, I'll filibuster. That's my thing. Um, as you all know, I'm a prime advocate of cryptocurrencies, and I'm a prime advocate of space. I love space. I took an astronomy class in college. You know that. Um, Visual Politics released a video today talking about asteroid mining, and it seems like if black people talk about asteroid mining, this N word is crazy. But here on the Black Brain Trust, we talk about things that are in the future. Mike said one too many times, one of three startups in the future will be space startups. And we've hinted that some asteroids are worth quintillions of dollars. He mentioned about one asteroid that's worth 25 quintillion dollars. There's a lot of asteroids in the asteroid belt, about a million. It's enough to give everybody on Earth $100 billion. I talk about this not to talk about space and technology, but to segue this into money, economics, dollars. Paper money will cease to exist in the future. There's not enough paper money out there to cover the influx of money from mining asteroids and planets and moons in our solar system. I'm saying it now on the Black Brain Trust this today, April 12th, just shy of our 1 year anniversary. That once we start to mine these resources in our solar system, I'm just speaking about in our solar system, that paper money will cease to exist. It has to go digital. It has to, in order to quantify that much money in a money supply.
Yeah, I'm gonna see if I can see what gold is doing. That's the thing. That gold versus the dollar thing.
And that's asteroids with gold. So nice segue.
Yeah, I was listening to y'all talking about that. Was it on the space night? I was lurking. I'm like, man, just to stop and just every time y'all say all of the minerals and metals that's on Earth are in space. I mean, I don't it's like I can't believe it. Every time you say it, I hear it, and if I forget it, and every time you say it, it's like I'm hearing it for the first time. That's just amazing.
Yeah.
That's all right. Looking at the daily of gold. Okay, we'll see if it flips and goes down. So everybody's looking at this. Is this floor going to hold? Because if it makes a new low here, it can drop a while. It's not anything to hold it. Let me see. Go to a weekly so I can show where the low is. So of course you see this momentum, nasty momentum on okay, on gold. This is the 2008. So you got this negative momentum, but the price is still holding, for now. We'll see. If it this is what to watch. This weakness here is feeding. And so now, okay, so gold is negotiating or got to survive this weakness on this weekly chart. we'll see if it goes lower. And because if it goes lower, we're going to go on, these two lows are going to be under attack. And this one is the one that's really scaring everybody. And this is from 2015. I'm of the opinion that we are going to go below this 2015 low because the dollar has a significant way to go. But the charts are kind of, it's not conclusive either way. So we have that low in gold corresponds to this high here in the dollar. So, and we're looking at a weekly here. So it's just kind of an in-between ground. The reason I say it's going higher is because when prices retrace, they retrace according to like a Fibonacci, usually a Fibonacci extension level. There's a certain amount that the price has to, let me go bigger than a week just to get more data. Has to go more like about 38%. The usual Fibonacci retrace levels is 38%, 50%, or basically 62%. Okay, those are the most common. It can go higher, but it usually goes at least one of those. We're not there. We're not even at, I mean, even a shallow retrace would be 38%. We're not even there. Okay, so we're just in this middle ground where price has just been kind of putting along sideways. So if the dollar was so weak, it should have given up the ghost from 2011. It's just putting along sideways, and gold, same kind of thing. It's just been kind of putting along. Oh, I'm sorry. Since this bottom in 2015, just kind of going sideways. Something's got to give. Either we're going to go higher, either gold's going to go higher, and that would take Bitcoin and cryptocurrencies higher, or it's going to fall. But we can't just keep going sideways. We've been in this long, pregnant sideways move for a long time. And I'm reasoning that the dollar has not finished, has not retraced to a typical Fibonacci extension level. So on that short-term analysis, and coupled with my longer multi-decade analysis, it's just not there yet. So we're going to get some determination one way or another, and I don't think it's going to be that far, but we got to do something. And this 38% retrace would take us back into the area of challenging a prior high, and that's typically what happens. You revisit a prior high before going south again. So that's what's going on with the dollar. We're just in a big, the charts don't really justify either. It's not a clear signal for the bulls or the bears, but the market is showing, let me take a look at the euro. I have not looked at that in a long time. I don't even usually look at it, but that might, let me see. Yeah. So sometimes I do that. I try to look at the other things that are opposite the dollar. The dollar might be that was dollar Swiss franc I was looking at before. So if I'm seeing a vague signal there, I'll look at other currency pairs that trade, let's say, with a negative correlation to it. And the euro, and this is interesting. It's monthly. We haven't crossed over, but we are deeply oversold. Euro could flip, it could rise, but we'll see. So I'm gonna be paying attention to see if we make a higher high with this. This is the candlestick for April, or do we, drop some more? So it could. It could, you know. And see, this is where technical analysis gets confusing. On a quarterly chart, it looks like we could be going down some more. On the monthly chart, it looks like we could rise right here. So in situations where I'm getting conflicting information, you just put a trend line. Like, you know, like when we were rising, it's I hadn't looked at this in so long. A long time ago, at some point, you see, I had this trend line. We got to overbought. Sure enough, the price fell. But the question is, will we take out this low? So far, we haven't. So we'll see how it goes. But as long and so now, I really should put another trend line here. And so as long as the price stays below that trend line, the bias would have to be considered down. And you're just looking to see if it keeps making a lower low. So as long as it does, you trade in that direction. Now, weakness in the euro means usually corresponds to strength in the dollar. So if this suggests, hey, it could be flipping right here. We'll see. We'll see. It's just a big. So the confusion or that I'm in right now is the same confusion for the market. That's why 1 week you'll hear optimism from the analysts. The next week it'll be pessimism. Then they'll tell you that it moved because somebody got arrested. Look, until we break out of this sideways pattern with the dollar, we're just going to be putting along, not knowing what the heck is going on. U.S. oil fund. Let's see, that's another dollar sensitive situation. So the thing to do is to not, you don't walk away. You don't just set it and forget it. You pay it. You watch what the chart is doing. So this is oil, and this is that high I was talking about in October, and this is the daily chart, and it fell to around Christmas Eve, or day after, the 26th of December. And as I said before, usually you get a retrace of either 38, 50, or 61, and price came right up around the 61. It looks like it's kind of going sideways here, so we'll see what it does. So oil does not look as promising right here. So when you have something that has fallen, let's see, it was overbought, it fell, it came back up here to being oversold, but the price didn't make a new higher high. So at this point, you just put a trend line on it. Now, I am biased in that these Fibonacci levels are such that I don't like betting against them. The odds are not really in your favor. The time to be optimistic was when a higher high got made right here. That was the time to be optimistic and say, okay, as long as it don't take out this lower low after it made a high above this candlestick here, I'll stay with it. And so then you get to this area, you go, okay, well, it might drop, but I can get out now because I made all this money. Okay, but now someone hearing the news will think, well, it's a good time to jump in right now. Look at this. It could go higher. Well, and as a trader, we like to see, we look at the prior trend. And say I had a line right here. When the price broke this trend line, that's when we get excited about it. So we get in when this trend line, around this trend line violation. Think of an imaginary line going here. So this breakout here is where we would get excited. We make all this money and we get out. And so if it moves up another couple of dollars, who cares? We made all this money. We're not trying to be greedy. We're not trying to wait to the last penny. And that's something you have to train yourself to do as a trader. You buy in the early stages of the run. And I'm not a day trader. So, you let the trend develop. So now you put a support line under here. And again, for me, since it's in this 62% area, I would get out. And if it, popped above it, I wouldn't be mad. I know it. I know it's got to take a pullback at some point. Let's say it's going to continue going higher. What it's likely to do is have a pullback and go to the oversold state. Let's say it does that and it comes down to this area and it doesn't take out this low. I could just buy it again. So then I'll be buying again at this low, lower level, where more minimum in theory, if I'm right. Let's say that someone's thinking that we're gonna continue the trend higher. You want to be buying at this lower end of the oscillator if you're bullish. You don't want to come in at the top. So this is where you just go sit on the sideline and you let it come down. And if you're bullish, you buy it at a lower level. And you pick a low before that and you say, well, if it drops below that point, I'm going to get out. And if it does, then you have to consider that maybe you're wrong. Maybe it's not continuing higher. It's going lower. But at this point, when they cheerlead on TV and tell you that you should be buying oil when people have been made all this money since Christmas basically, and here you are like what 4 months, January, February, March, April, 4 months after Christmas. Now they want you to come in and buy now. They want you to be the sucker. So technical analysis helps you, find these opportunities to get in this area so you can ride here. So that's that. Was there anything else, Mike? Any particular chart? That's all. It's Amazon or something else you wanted to see?
Yeah, you can look at a couple of tech stocks. I don't see why Tesla or
Yeah, let's look at Tesla. But yeah, like even Amazon, it made a higher high. This, I can't in this weekly chart, I can't argue that hey, it's not falling yet. You can put a trend line here. You can see it just, staircasing its way on higher. If let me see what the Fibonacci tool says. So I use this Fibonacci tool to help me gauge risk, to get me in the trade. If I'm close to a normal area where we retrace, I accept that I missed it. Okay. Okay. So this is really more like 78%. So yeah, so from 100, take away 62 is 38. I got it reversed. You can do it this way. It doesn't matter. You can move it like that and it'll flip the numbers. And after a while you get used to it. It doesn't matter which way it is. So we're really closer to like 78% now. So this shows you that sometimes it can go beyond 61%. Now I'm working from the perspective that Amazon is going to flip and go negative. Now I could be wrong. It could continue and go higher. Okay. But I'm just looking at the business cycle and I have my opinion based on, Elliott wave theory. And I believe that this top is in. Now, if it makes, a higher high, I could be wrong. But I would not be putting money here betting against it until I saw a lower low made. Okay. So this is a weekly chart. I would just ride this as long as it's playing fair and making a higher high week to week. I would ride it, but at this level with such a strong retrace, the first sign of trouble, I'm out of there. So also the oscillator is up at 80, 86, 85. Anything over 80 is considered like overbought. So the odds are not, not great odds in your favor at that level. And we got a megaphone pattern. I think I got drawn here. Think of like the megaphone for when a bullhorn or a megaphone. And so yeah, that's a common pattern. So what was another one? So we're in a big, so we got, this major tech stocks. It's already in the overbought area. It's just a dangerous time. And it's not a time for people to not look at the chart, So if this flips, You know, this run up has allowed people who owned at this level to get more than half of their money back. So okay, the price tanked, and they got more than half of their money back. So if they were thinking on the way down, okay, this is it, they got a chance. They got a second chance to get out right here. And if they continue to hold on, thinking that it goes higher and they're wrong, I'm not gonna feel sorry for them because we're already in an overbought state. At some point, you got to go. Okay, I want to trade with the odds in my favor. And let me see on the daily what it looks like in terms of, okay, so you can kind of see the momentum kind of slowing down right here. Yeah, you kind of see it waning right there. So that's the way I would I think the odds are not in your favor at this stage. You know, when the price broke out right here, this was the time to get with it. Was there anything else? Amazon, yeah, there was Amazon. Was there another one?
Tesla.
Oh, Tesla.
Tesla.
Yeah, thank you, thank you. Okay, what's been going on? Tell me about Tesla, Mike. I haven't heard all of the news, but give me some. What have they been talking about in the headlines of Tesla? Because I know they've been in the news a lot.
Their car has become an appreciating asset because of the artificial intelligence and autonomous driving capabilities.
Okay, but the sales are starting to suffer, right?
Not necessarily. I think they sold just about every car that they had.
Wait a minute, I thought they were
I mean,
losing.
you're not. I don't think you're. I don't think they are seeing new signees, right? New growth. But every car they've made, they've sold.
Okay, this is a very interesting chart. One, we're a weekly chart. We're overbought. I'm sorry, oversold. Looks like this momentum oscillator getting ready to flip. It could go higher. We got a low here. We got I think this is lower. Let me see which one of these lows is lower. This is 247.77. This is 244. And this is 254. Okay, so this is the low. But this 247 is higher than this, and this low is higher than that. So we at least on the upside, at least you have higher lows. On the downside, it's very rare to have like a triple bottom. There's a common saying among traders, there's no such thing as a triple bottom. I would pay attention to. If I was to get long here, I would watch it if it went below this candlestick, this green one, because then you're getting close to this danger area here. So that's going to be but now again, it could rise from here. So I'm just saying, if I owned this right now, I would be very conscious of this low for this candlestick right here. I wouldn't want to mess with it. If this thing was to rise, in fact, I would take the position until it made a higher high on these candlesticks right here. I wouldn't mess with it because it could fall through this floor. And if it falls through this low, there's no significant price support to stop it from going from $250 to, let me open up some more. Yeah, nothing to stop it to get to here to about 180. It could, that's a big drop. Nothing to stop it. And yeah, so we sitting on a trend. I mean, you can see a support. It's like a diagonal support right here. It's right in the general area of it. But in the positive side, we're oversold. So it technically could rally from this point. But it's just in a dangerous area, dangerous zone. Gotta watch it. Watch it. If you own it, watch it every day. Watch this sucker every day. What were you saying, Mike? What were you getting ready to say?
No, I was gonna say, and one more would be Walmart, considering
Okay.
the news that we covered this week about Walmart.
Okay, let me see something on the news in Tesla. I want to see the date. I don't even want, okay. Because sometimes they have old news here. I don't even like reading no stuff that's a week or two old. This is technical stuff. Okay. I thought I heard something about the sales at Tesla. But half the time I don't pay attention to a lot of that fundamental stuff. Unless it's like hard numbers, like hard sales numbers. Yeah, I want to know that. I don't want to hear too much in the way of opinion. Tell me the hard sales numbers. And you said, I'm sorry, what was the stop?
Tesla. I mean, not Tesla. Walmart.
I forgot, what is Walmart? WMT? Yeah. Oh man, look at that. Okay, this is a daily chart. Nice. Let me start from monthly and go down. Okay, got momentum there on the monthly. It's not in the oversold area or the overbought. It's right in the middle, so it could go higher. Walmart is in the consumer staples sector. So when the market is in trouble, stock market is in trouble, say the big sexy tech stocks, people run to Walmart, grocery stores. Okay, so your Kroger, Walmart, Safeway, those are hide places to hide out. And so this is a quarterly chart, and it still has positive momentum. So the monthly had positive momentum. The quarterly had positive momentum. The weekly is just kind of flat, but it looks like this fast line, which is the black line, is crossing above the orange. So that looks like it can be going positive. You got declining volume here, but the price is holding, going sideways while the volume is going down. But now the momentum looks like it's getting ready to go up, and 65 is, the overboard is above 80, so it could go even higher. It looks like it got good momentum on the weekly, the monthly, the quarterly, and I value those more than the daily. Now on the daily, we are over bought. Now nothing's stopping it from staying overboard like this did for a month. Who knows? In a month, it could do this a month and take out this high. So this would be something to watch. Let me look. I want to look at that marijuana stock, that canopy growth. I was talking to or email exchange with what's the brother? Matty Ghost. I'm trying to. That's Charlotte's Web. That's one of them. He's in. That's more Charlotte's Web. I think it's more hemp based. And we were talking about this last week, and I was telling them about this declining. This divergence. Now, although this isn't the MACD, in that article we had up, we were talking about divergence. That means when the momentum is going one direction and the price is going another. The divergence. So you can see divergence on an RSI and stochastic. You don't have to have a MACD to see it. And that's probably why I don't really use the MACD a lot, because I can get the same information from other oscillators. But it's like whatever people are comfortable with. If you get good at one oscillator, stay with it. So okay. So it's hanging, not too, it's got divergence, but it's not, doesn't have like serious price destruction. You know, holding on, holding on. Okay, on the daily, it's oversold. We got a lower low here than there. So looks like we'll see what happens if we get the momentum gets going. See, see if it breaks this imaginary trend line we got right here. We'll see what happens. But yeah, we just as the S&P is sitting at the let me use the SPY. This is the real deal. This is the mother of the American market. This is your retirement account and all that stuff. And this is quarterly. Let's see. Where's my stochastic? I don't have a stochastic on here. Let me get rid of this and let me do. Okay. Yep. Okay. So we've been this thing has been like above 50. This is some serious strength. So from December, this thing is pretty much the oscillator, the strength oscillator, this stochastic momentum has been above 50 this whole time. That's been a pretty strong rally. And today it made a high. It made a new high since the rally at Christmas. Now, it still has not made an all-time high, which is this from September. So that's what we're looking at. Now, what causes me to be pessimistic is this stochastic here. And I'm trying to see if it flipped. Let's see, the blue on that information box is 93, so that's low. So no, it hasn't flipped yet. They're sitting right up on top of each other. But we made a higher high today. We'll see. Not much of a wick going on here. Some I can't really say that's a hammer. I can't really say that. It's too close to call. But we'll see next week, because now with this oscillator sitting right on without, it hasn't flipped yet, but it could run out of steam next week. So that's going to be a big week next week, and more companies for you fundamental traders that think that news shapes the price. Somebody's gonna miss earnings and the price is gonna fall, and they're gonna say that the price fell because company X, Y, and Z didn't meet their number. If you're a fundamental trader, you want to think that way, go for it. But I don't think that way. This is the way I look at it. If it breaks that trend line, that's it. Another reason why I'm biased in favor of the technicals on a very large number. One day, Mike, we're gonna have to really get into this. Maybe get somebody to know more about this than me, even about the impact of computers or trading bots, automation, AI on trading. Okay, so when prices cross certain points, there's so many computers that are programmed to quickly sell, to protect the accounts of like these large pools of money, whether it's hedge funds or just whales. And something like a violation of this trend line would cause those computers. No human being would have to be involved. That computer is programmed to say, if this price falls below this, it's over. Okay, because it looks like what we call an ascending wedge. You can take this here and put it there, and we can I'm gonna look this up on Wikipedia and then we can close it out. But this is a very common pattern called an ascending wedge, and so over time the trading range narrows. And so the bulls and bears are like right at the middle with the same price, as opposed to swings like, big swings over time. Now we have a very narrow range. And what usually happens is when the trading range narrows, you get a big increase in volatility. So this thing is going to break out. Either it's going to break down or it's going to break up. But the odds of it falling is greater because we've been overbought for a while. And this is the daily. On the weekly chart, I showed you where it's about to flip. So this ascending triangle is going to give us some kind of resolution. Let's look it up on our site. Let's watch Investopedia come up. Since that's my favorite site, it should be your favorite site too. Yada yada yada. Is a chart pattern using intelligence created by price moves and reliable horizontal line. Often called a continuous. The price would typically break out in the same trend that was in place just prior. Okay, this is key. Ascending triangles are often called continuation patterns since the price will typically break out in the same direction as the price trend that was in place just prior to the triangle forming. What was the price trend? Down. The prior price trend was down. So those trading bots, they see that ascending triangle. If that price breaks below that floor, my technical response is going to be the price fell because it violated support on an ascending triangle. Now, the fundamental people are going to say, well, the price fell because company X, Y, and Z didn't make their earnings number. And we'll never agree on that. Which is always the fundamental side and the technical side is always going to have a different explanation. And so you're just going to have to choose which camp you're gonna roll with, and if you're gonna do a little of both, you're gonna have to choose which one is gonna be predominant in your thinking. So that's so we got a little bit of technical analysis today. Learned about ascending triangles, and you see, I explained my thought process how. Even when I'm getting all these conflicting information with these oscillators, I do the most basic thing, which is put up a daggone support line. Okay. So, and then I just trade in the direction of the breakout. And as long as it's making a higher high or a lower low, I just follow that trend. And over time, a pattern unfolds. But as that pattern is unfolding, either an up pattern or down, a trend starts to develop. Either it's an uptrend or a downtrend. I'm making money all the while. So, you just trading the percentages. So, something that's been running up for a long time has to fall at some point. So, there you go. That's a technical view, or at least this technician's technical view of what to look for next week. I have not done a video in about maybe 2 weeks because there's been nothing to say, because you have all these oscillators trading in the middle of the range, and I just don't want to make gratuitous videos and tell y'all look out when there's nothing to look out for. So but if that oscillator flips and we make a lower low, you will see me make a video. So if you are not subscribed to my channel, do so and hit that alarm, because otherwise, you won't know. Because again, I'm not going to make gratuitous videos. So if I post one, you might want to check it out. Sorry for rambling.
No, it's cool. It's cool. But thank you all for joining us, and we'll be back tomorrow for Black Business Talk tomorrow, Black Social Enterprises. So make sure you tune in for that. Hit that notification bell, the subscribe button, the like button, and share this video as possible. And we are out.